Hi, my name is Dustin Miles. I'm with Momentum Multifamily. I'm excited to have John Todderud here today, and I know we've spoken a little bit in the past, so great to see you again. And yeah, I'd love to if you want to do a quick intro on your end, and we'll kind of dive into it.
Thanks, Dustin. I really appreciate the opportunity to join you and share a few things about my experiences in real estate. Talk about it, a lot of the fun aspects and maybe not so fun aspects, and explore a few things that hopefully help listeners and help people get started or help people progress a little ways along the way. I'll keep my intro brief. I've been buying multifamily for about 15 years and I've been full-time in it for the last 3 years and have started small in my area and expanded into larger properties in other parts of the country and doing syndications and still doing it. I'm very bullish on multifamily and love talking with brokers and finding properties and operating. It's just a very exciting part of the business. I think that there are awesome opportunities for multifamily investors in coming years. Look forward
Awesome.
to it.
Yeah, that's great. And just to kind of give folks, a little bit of background on you. So, where are you located, and what before you were doing multifamily full time? What was your career before that?
Yeah, I am located in Seattle, Washington, outside of Seattle. I have lived here for a long time and love the area. I'm very much into the outdoors, all the outdoor activities,
Oh,
and
cool.
and moved here from the East Coast. But like everything that I do around here and see and well established, I started buying multifamily here, as I mentioned, 15 years ago. I've had a career in information technology.
Hmm.
Software engineering and then an entrepreneurial activity. I owned my own business for about 10 years and have been doing I did IT consulting for a number of years. Managed other software engineers. Have pretty much done most of it. I like the consulting piece because I just like different aspects of IT and be able to do a project and run it successfully to completion and then move on to other ones. And that served me well over a long time. And along the lines, I wanted to take care of my family better and build more personal wealth and started looking into real estate. For me personally, I started small properties, 3 unit, 40 unit that were not too far from me. And was able to manage them myself. I was doing all of the activities for the properties initially. It took over ownership, drive over to the property, and discover that a unit that they said had a tenant did not have a tenant.
Oh
And
no.
so like, okay, this is the first thing I have to learn is
Yeah.
I need leases. I need to write a
Right.
lease and get legalities, and I need to figure out how to advertise and Craigslist and all that stuff. And little by little, you learn everything you need to do, and you learn and you meet people. You go to meetups, you learn where how to learn, and you get better at all these things. You discover that there's better people to do a lot of these tasks than I do, especially repairs. I can repair a few things, but
Hmm.
they don't usually stay repaired. So I find other people to do those
Yeah.
jobs and grew them. I had smaller properties, got better tenants, better income, sold them and bought bigger properties, and then along the lines discovered the magic of third-party property management and having somebody else do that. It was a tremendous relief to me and freed me up to do other things, and you learn how to manage managers, and that in itself is a whole different ball game.
Yeah.
But it allows you to scale and build and grow and have those properties and then I realized I can buy anywhere in the country and so that I'm starting to look at other markets and along the lines I um I was going to multifamily conferences. I discovered those. Some people in
Hmm.
my area recommended a couple, and I started going to one and talked to people there. Those are wonderful
Yeah.
opportunities, really, to learn and to meet people. and learned about pooling other people's money, syndicating, and how there's a lot of people who want to invest passively into good real estate deals for qualified, experienced operators. And that's what I set out to become. And this was maybe 8 or 9 years ago. And so I started syndicating, and really that's what I've been doing since. I'm syndicating multifamily deals. I'm out talking to brokers, finding out what they might have, and getting to know them, developing the relationships. It's a very much a relationship business, and
Right.
picking up the
Hmm.
phone and having conversations, and that's what I've been doing since, and that's why it's so enjoyable. It's just all the people that I've met, very friendly, helpful people all along the lines, and I like to be that way myself if I can.
Awesome. Yeah. So what was the so you were investing in Seattle? Was it Seattle proper or out in the suburbs? What did that look like?
Yeah, yeah. For most people who have some idea of Seattle, it's not unlike most major cities. Seattle
Mhm.
is a thriving city. It is
Yeah.
very growth oriented, and a lot of positive things about it. A lot of big tech companies have come here. Certainly Amazon is here. Microsoft is in the area. When I say
Yep.
Seattle, there's like the greater East Side, Bellevue, Redmond, Kirkland, those areas, as well
Yep.
as Seattle and points north and south. And Facebook Meta's here, Google's here, Apple's here, Amazon, of course, and a bunch of others have prominent tech employment in this area. So high income
Yep.
people, it's not all that favorable for owners and landlords. They
Mm.
passed a lot of laws in the greater Seattle area, in Seattle and some other surrounding communities that strongly favor tenants. And
Mhm.
it's positive for a lot of aspects. It was not what I preferred. I've been investing in the Seattle area. I had been investing outside of Seattle, a little further south, about a half an hour south of Seattle, and
Okay.
some of the more uh, the less, I wouldn't say, I mean, less affluent bedroom communities, but still strong. I mean, they're great
Yeah.
areas
Yeah.
to live and good
Great.
opportunities for growth.
Great. And so in those same communities that you originally kind of bought in, have you seen tenant laws? Because I know you did own had quite a bit in Seattle and sold those over time. The communities you were in, did you see changes in the communities in terms of eviction laws or tenant laws and all that? Did you see that change over time?
It did, yes, there
Okay.
were.
Okay.
As I mentioned, I started 15 years ago, and so I was
Yep.
buying at the time. I was pre-COVID. This is
Yep.
2010, and
Yep.
it's
Yep.
pre-COVID, and the laws were becoming tighter and less
Mm.
favorable toward owners and landlords, and uh, more difficult to follow through on evictions.
Right.
But I would say also, I know a lot of investors in the greater, I mean, Western Washington, the greater Seattle area, who do really well and who favor
Hmm.
this area. They love all the quality attributes about it, and there are a lot of them. And so
Hmm.
it's just me personally. I wanted somewhere where there were fewer headwinds.
Yep.
Less forces and laws and regulations working against you. And I chose other areas outside of the state of Washington, but man, there's a lot of great successful investors and places to invest in this area. I just moved myself.
Right. Yeah. Yeah. I've met a few people who have considerable portfolios there. I can't remember if I can find the name. I'll be sure to connect you. But
Okay, yeah.
there was someone I'd met more recently that I think they had. I mean, it was a pretty big portfolio. I think it was all syndicated, but I mean, they have 1,000 units kind of in the
Oh,
Seattle area.
fantastic.
Yeah, pretty
Yes.
sizable. So,
Yeah.
anyways, but so. So you had a portfolio. And I was looking at doing a little homework and looking at your website, and your equity multiples were pretty attractive there on some of those, and so I think that's where some of the tenant laws, started to kind of come into place because rents were shooting up, and I think people were getting concerned that it would price people out and people wouldn't be able to afford the things and things like that. So you owned in Seattle, and now you're syndicating and you're outside of Seattle and kind of across the U.S. What does that look like? Are there are there certain areas you really like? And if so, just kind of what are you looking for on those deals that are larger and kind of outside of the Seattle area?
Yeah, yes. Good question. I earlier on, one of the guys I learned a lot from was Dave Lindahl, and Dave Lindahl
Oh
has
yeah.
he's a proponent of emerging markets, and so I became very interested and enthusiastic about finding good emerging markets across the U.S. and learning what they are, how to tell the attributes, how to determine them from certain types of metrics that are harder to find
Yep.
and what the sources are. And so I spent some time with those. I initially really liked the Southeast, and that was where my first syndication was. I liked the Carolinas and Georgia, Tennessee. I
Mm-hmm.
stayed out of like Florida and Texas because they're just too popular and too much
Mm-hmm.
interest and too competitive and
Yep.
um, all great markets and I do like them. But my first syndication was in South Carolina and then I
Okay.
started looking for more syndication or properties in that area. And it was I was putting in offers and I was way off from the
Yeah.
final purchase price, and I realized how can they make any money at that? And I became a little disillusioned, and then looked for other markets,
Yep.
and so I moved further inland into the Midwest. I like the southern tier mainly because of the macro migration from north to south, and these are big trends, big long-term trends, and it's
Yep.
not nothing urgent or immediate. There's nothing, nobody that's, I mean, with the exception of maybe Dallas, there's no place that is just growing like gangbusters. There's just a general migration, and so I
Yep.
chose markets. I like Kansas, Missouri, Oklahoma, even Kentucky, I'm sorry, Arkansas. Some of the the big cities in those markets is where what I like and I started making broker relationships there. This happened a number of years ago, and I talked to a lot of them and have some good friends. I mean, they're very nice people, and I've looked for properties and been successful in some of those markets, and that's where I still am today because I
Hmm.
think they are good uh, long-term growth markets. Population's still moving to them, companies opening up. You can read about larger manufacturing plants still adding a lot of people, and the laws and regulations are favorable. And you can get good tenants and you can hold on to them. And if a tenant um, has uh, um, has chosen for whatever reason to not be able to or not pay the rent, we can find a way that to get them out of there.
Hmm.
I mean, we are we do bend over backwards to make accommodations and understand people's situations. And that's
Yeah.
why we're in the business. We want to create good communities for people, and it works both ways. You got to be able to deliver uh, quality accommodations, places that they're safe and comfortable to live,
Yep.
but also we all live life. We have things that happen to us, and
Yeah.
we want them in our
Absolutely.
community. They've been to good tenants before. We're gonna work very hard to understand and support them if they have problems in keeping up with the rent. And so we work.
Yeah. I know on our end, well, I mean, first of all, no one wants to evict anyone because that's just it's not a good situation
No, none
and
at
and
all.
and all
Yeah.
that. But two, I mean, a lot of times, we have resources, we have nonprofits and all
Yes.
sorts of folks that can help. We just you have to have communication. If there's no communication, then there's no options basically. And so I don't know. I've always, just kind of tried to encourage our staff, like, hey, just make sure people are communicating. As long as people are communicating, like, let's try to, I mean, we can't just let people live there for free. We have bills too, and we have, you and I have, we have investors that, want to return and all that, on their funds. But at the end of the day, like, we want people to be there. We want people to be happy, but like, we have bills too. And so, and we have, the people that work there are relying on us to pay them, so then they can pay
Yeah.
their bills. It's a real,
Yes.
so anyways, but
Yeah, yeah. I mean, you mentioned the one thing, communication, and I was on a phone call with one of my property managers just this morning, talking about that, and and a couple of tenants. Here we are at the end of the month, and a couple of tenants who have not paid or not paid fully or have
yeah.
some kind of delinquency. And in each case, she talked about the conversations that she's had with them, and
Hmm.
to me, that's 90% of it. I mean, it's just it's so reassuring to know that their head's in the right place. They
Yep.
want to do the right thing. Here's what's happening to me. If it's medical or something else in their family or
Yeah.
whatever, um, we are very understanding and do work hard to work with them. We have places to refer them to also,
Yep.
and we
Yep.
will do that. But but we want to hear from them. I mean, bottom line, it's communications can uh, can make up for um, so much that they're having problems with. I mean,
Yeah.
we can
Absolutely.
help
Yeah.
them. There's so many ways we can help them.
Yep. Yep. I mean, I know, we've had veterans that, had, job loss or medical stuff or whatever, and the VA's has stepped in and helped, or we've had some
Yes.
nonprofits help. I know that that's those folks, there's lots of options for sure. Um, when you're looking at, because you mentioned, there's you have a number of properties kind of in different areas. You mentioned South Carolina, you mentioned Oklahoma. I think you guys have a deal in Tulsa. What size of units do you have? Does it need to be at least 100 units or 60 units, or, what's kind of, and are you looking for mainly C deals or B deals or A deals? What's your criteria and buy box there?
Yeah, yeah. I try not to be too selective when I'm talking to brokers. I have a fairly wide range of properties that I'm very interested and willing to look at in more detail. What's most important to me is the ability to add value to a property, and that usually comes through income increases. It can come from reducing the expenses also, but that's a little harder in most cases. There's a lot of opportunities where income at the property you're looking at is somewhat or maybe significantly lower than the when I say income, I mean rent. The rents
Mm.
are lower than comparable properties nearby. Those are things that we look at. And so
Yep.
if you see that disparity, then how can we get the income up? What can we do to that property? There's got to be something. Maybe renovate units or fix up the outside. It's usually more than just superficial putting a band-aid on it. There's usually something tangible that has to be done. Those are the most important things to me. So I look at um, properties in the B and C class area that can benefit from an upgrade. I look for properties um, for the most part, and again, this is not a hard and fast rule that can
Right.
support an
Yeah.
on-site manager, and usually that's 70 or 80 units.
Yep.
Um, and I mean, I have properties that are fewer than that, and and they do well. Having an off-site manager, a third-party manager that there's nobody there on site full time, that can definitely work. A lot of people don't like them, but I don't mind them at all. And so it depends. And so a broker will ask me, how many units do you want? And I'm usually like, I don't really have a number of units. And I know that I wanted of at least of a certain critical size, but for me, I'm not buying 20 or $30 million properties. Maybe someday I will. That's not really my market at this
Hmm.
point. Or I mean, I might join with somebody else, but I'm not going to try to raise the capital for a
Right.
larger property like that. It's too heavy of a lift. And so I'm looking at smaller properties where where I have a reasonably high confidence level and assurance of bringing it to close. I'm not going to
Hmm.
take it along these steps, especially bring other investors along if I think it's really just a crapshoot whether I can close this thing or not. I'm
Right.
I'm not going to do that. I want a high certainty of closure, and so I look at properties with that perspective. What's the value per dollars per unit, number of units? I mean, all those things are
Yep.
important. What kind of loan can I get? If it's a low occupancy deal, it could have great opportunities to improve it. I may not be interested in something like that. It takes a different type of loan product and
Yep.
more expensive and um and I might pass on something like that.
Right. Right. And then there's, yeah, potentially more risk involved with that too.
Yes, for sure. Yeah.
Um, what are just in terms of I guess do you want any challenges or interesting stories that you might want to share with our audience?
Let's see. I've had properties um, that have problems that would scare people away in a lot of
Mm,
cases. I've
yeah.
had properties that where a tenant is unhappy enough that they're going to call somebody outside the property, like the city, and complain about it, and
Mm,
uh, and those are not good situations
right.
where
Yeah.
especially like one example is a number of years ago, probably 8 or 9 years ago, uh, it was a roof leak and coming in, they were an upper floor unit and it's coming in through their ceiling and they call, "Oh, I got a leak in my ceiling." So, okay, we'll send somebody out and we discover that that's coming from the roof and we put somebody up there and fix the roof when the dry weather comes. And then, oh, there's another roof leak in a different unit, and then, oh, second roof leak in the same unit. Those
Hmm.
kinds of things, and the tenants they talk to each other and they get upset, and it's too frequent, and then the city comes in and the city says,
Oh wow.
um, fix it and fix it now. And here are the penalties by this date if you don't do that. And
Wow.
coming down pretty hard. And and I've gone through that. It is not pleasant. And I've had to, that taught me that when there are multiple roof leaks, in this case, it was a flat roof, get the roof
Mm,
replaced. Get a
yeah.
new roof on there. You can't keep fixing little problems like that. And so those are you want to do these repairs before someone else comes in and forces you to. And there's another reason for it is that when there's an outside a city or county jurisdiction mandating it, your requirements, the threshold for you completing it satisfactorily is higher. You
Right.
could do a good fix that will last for a long time, but it still might not meet everything the city is requiring. If you wait until the city comes down on you, the cost of you doing that fix could be considerably higher. I've seen that on a couple of occasions. Other instances, problems are having criminals or having people do bad criminal things on the property or at the
Yeah.
property,
Yeah.
and it's like, how did this person get in? Did they have a
Right.
criminal background? I've had assaults against one
Oh.
tenant against another tenant,
Oh
and
geez.
and oh yeah, it's terrible. And then, well, you talk to the property manager, how did this happen? What's that tenant's background? And discover that the property manager did not do a thorough enough due diligence on it. I mean, I haven't had that in the last 10 years. It's
Wow.
over 10 years ago this happened, and I would never let it happen again, but my property manager was negligent. They didn't do the due diligence, the criminal background that they should have in those cases. And you learn. I mean,
Yep.
you replace the
Yep.
property manager, and you have to be, I mean, that's another whole skill set is how
Yeah.
to manage
Yeah.
a property manager. And I feel like I've become expert at it. I've had to do it so many times, but
A- Any on that line, any red flags that you've kind of seen from a property manager or the management company where you're like, if I see that, I'm out of here.
Yes, it's a mindset that's not owner oriented. They
Okay.
have to think like an owner, and it's not just maximizing rents, get every last dollar of rent
Right.
increase they can. I don't do that. I mean, I
Yeah.
we're all looking for rent increases, and you invest in a unit, and you expect a kind of a renovation premium from that unit after you put it back on the market.
Yep.
That's all well and good, but if a landlord is renewing tenants year after year, and their tenant and the rent is way low, but the renewal is at the same rent. We know they're not really thinking about ownership. It's not
Yep.
what an owner would do. And if maybe you don't jump the rent to market rent right away, but you got to have it on a scale to get there at some point, and maybe that's not the right place for that person to live. Give them an opportunity to find another lower cost place. Those are some of the red flags. And taking site visits. You yourself as owner need to be on the property. I mean, who's to say how often? Once a month, once a quarter, that's kind of often, especially if it's another part of the country. But once or twice a year, I think is reasonable and not always planned. Show
Yep.
up as a surprise, and
Yep.
maybe send somebody else who you know in that town to visit it and look at the property.
Yeah.
Is the grass cut, or the wind, are the blinds broken? That's kind of like an indicator that there's other problems, and especially glass broken, those kinds of things. You have to be watching what the property manager is doing. A third issue that always bugs me is when a property manager is taking too long to turn a property or to turn a
Hmm.
unit. Sorry.
Yeah.
Um,
Yeah.
they knew the unit was coming up and the tenant was moving out. Even if it was an eviction, you still know it's coming.
Yep.
And uh, you didn't get in there to find out what it needed. You didn't line up your flooring person, your painter, whoever else is needed to turn that unit. You didn't get them in place. Now that the unit is empty, you're a week later, you're sending someone in. It's the end of that month before somebody even comes in to fix things up, and it's not marketed until 30 days later. That's not
No. Yeah.
acceptable.
Right.
Yeah.
Yeah. Absolutely. Any just I guess what is your the rest of your 2025 look like? Growth plans and all that. How to yeah, what does 2025 look like for you?
Yeah, yeah. I've been uh, very uh, selective and wary of the market the last couple of years. I've seen a lot of
Yeah.
deals, and I put in offers, but I'm not chasing something. There's still a big disparity between what sellers want and what buyers are willing to pay. Interest rates are still high. It's difficult. It is not, the gates are not wide open yet, but I can see them coming. I can see, it's indicators that a few things happen in the economy. We could see a healthy break on interest rates,
Yep.
and that'll bring a lot of buyers back into the market. There's also been a lot of new construction in many markets across the U.S., and that seems to be leveling off this year. And so there'll be opportunities for rent growth in the future. I'm definitely a buyer. I'm looking. I'm talking to brokers and putting in offers, and I hope to be able to get some more properties this year. I'm optimistic that this year will be seen as the turning point. I would also say that if you wait too long, if you're a buyer, and you're waiting until all the lights are green, it'll be too late.
Yeah, yeah. I mean, if the coast is clear, like everybody's coming out, right?
Exactly. Yes.
So, yeah, I think when there's at least some element of risk out in the market, that's when, like I think, over the last year, probably, late 23 through 24, that's probably, kind of the bottom, of the market. Like I said,
Yes.
I agree with you. I really think we're turning a corner. We're seeing, we on our end, like we're seeing, we have multiple deals where our occupancies at, we're, touching 100% or close to it. And so and we're seeing lot more traffic. We're because of our occupancies are trending up and all that, we'll start seeing some income, highs and all that. And so we'll be able to start really, bumping rents here a little bit, at least. And then if you look at RealPage and CoStar, they're projecting, at least I'm talking, more Texas 'cause that's what I knew. But they're projecting rent growth for everywhere except for Austin. Man, they just built a lot of units, and so they're going to still be in pain throughout this year, and they'll start to see a little rent growth next year. But
Yeah, yeah. All of those markets. I mean, I know a lot of people in Austin, and they're kind of watching and feel
mm,
that pain. But all of those markets really are still healthy markets. And
yeah,
and
yeah, there's still a ton of people moving there. They built a lot for how many people live there. So they're just kind of working through that. But once, I'm sure Austin, just because it's, one of the highest growth markets in the country. As soon as they work through that, then it'll be, go back up, and then there, might be another boom bust little cycle in
yeah,
there too. But we'll see.
yeah.
Um, how do people get in touch with you? What's the best way to kind of reach out and maybe, talk to you about some of these different markets that you're in and kind of just get to know you?
Yeah, yes, a lot of different ways. Yeah, I can be easily found on LinkedIn. There's only one of me in the world. It's a kind of a unique last name, and there's only
It's
one of me,
easy.
John
Yeah.
Todderud. And another easy way is learnaboutapartments.com. It's just learn about apartments. It'll take you to my website. My company is Cardinal Oak Investments, and it'll take you there, and you can reach out to me through any of that. Um, Find me email, John, John, at cardinaloak.com. Any
That's
of that.
I really like your learnaboutapartments.com. It's a great domain you picked up there. So
Yeah, yes, yes. It's
yeah, good for you.
hopefully easy to remember.
Yeah, yeah, absolutely. Well, great, John. Appreciate your time. Good seeing you, and look forward to chatting more again soon. Hope you have a
Likewise,
great day.
Dustin, this has been a pleasure. Fun talking with you.
Thank you,
Hopefully,
John.
we help some people out.
Thanks. See ya. Bye,
Bye bye
John.
now.